What's up guys, Humphrey here. Welcome back to my channel where we talk about personal finance and investing. And today I wanted to make a follow-up video on the video that I made last week about GameStop. As you may remember, last Thursday, a lot of brokerages, including the biggest one, Robinhood, decided to halt trading on many ticker symbols that were deemed Reddit or meme stocks, such as AMC, GameStop, and Nokia, etc. So after that happened, I was pretty emotionally charged. I didn't really know why they decided to restrict trading, and then I started to read a little bit more over the weekend and try to understand the full grasp of the situation. I was mainly curious on how a clearinghouse works, how a market trade actually settles, because no one really tells you these things when you're buying a stock on your app. It just kind of like, you just press a button and then all of a sudden one day you have stock, but how does that actually work on the back end? And a lot of the controversy around it was basically because no one really knew how that worked, and it wasn't really communicated very well by the Robinhood executives or by any other brokerage executives except seemingly the WeBull CEO. So because I was so curious over the weekend, what I did was I spent a few hours trying to understand exactly how trades work, and then basically I wanted to distill all that information into this video today, hopefully pretty simply. I would say the most important resource that was available to us, which I will link in the description below, is an interview with the WeBull CEO that actually YouTube channel Benzinga did. Now, before we get into that interview, what I really want to do is make sure that you guys actually press the like button on this video, because that helps it get out to more and more people so that they can understand this information as well. And also, I want to cover exactly how a trade works, because we need to understand how a trade works before we even get to the context that the WeBull CEO is going to give us. So let's say you're using an investing app such as Robinhood, WeBull, TD Ameritrade, Fidelity, etc. These are all brokerages. All these brokerages work with what's called a clearinghouse, and all those clearinghouses also work with what's called the DTCC. The DTCC, also known as the Depository Trust Clearing Corporation, serves as an intermediary between all clearing houses. A broker might have its own clearinghouse or use a third-party clearinghouse, but essentially the brokerage is basically the front end of the trade, and the clearinghouse and the DTCC are the back ends of the trade that you never see happen. So on the back end, that's where trade settlement occurs, and I'm going to throw up the definition of what a trade settlement is, but basically it's the process of transferring securities into the account of a buyer and cash into the seller's account. So basically, a trade settlement is the actual act of the trade taking place. Now, the DTCC's role is to actually guarantee that these trades fully execute so that you get the money for basically selling your share and someone else gets the stock if you're selling your share. The other thing you need to know about a stock trade is basically when you go and buy a stock, after that trade is placed and has executed, it takes a full 2 extra business days for that trade to settle. So since there are basically 2 days after you place a trade where your cash is basically in limbo awaiting the stock, that DTCC organization that actually fully guarantees that trades go through requires what's called collateral from its clearing firms. There are a lot of factors to how much collateral basically the DTCC requires from its brokerages, and that actually depends on a large variety of things, but one of them is volatility. So that's how a trade works. It takes 2 days to settle. There's an organization that basically makes it happen for you, and what's happening on your app, such as Robinhood or WeBull, for example, is after you place that trade, you might get that credit from Robinhood, but that's just Robinhood saying, okay, we're gonna give you a credit for whatever you just bought or sold. You don't actually physically have, I mean, everything's digital now, but you don't physically have that money or that stock. Robinhood is just basically saying, hey, we're gonna give you credit for this, but we're representing it to you visually on the screen right now. I know that's a little confusing, but all the apps do this. So they essentially say, you just bought this stock, we're gonna give you a credit of the stock, and your order's actually been placed through our system. And so we actually have that stock reserved for you. And once the DTCC clears everything, then we're gonna put that stock into your account. So let me summarize what the WeBull CEO said about the entire restriction of stock trading last Thursday, and hopefully this will give you some context on how brokerages work and why they had to restrict trading. Let me play you this clip from the WeBull CEO. It's about 45 seconds, and you'll exactly hear from his mouth what the DTCC told him.
Someone has to fund that trade, and the clearing firm does that. That's one of their jobs. And typically, there's a collateral of about anywhere from 1% to 3%. So if you were selling a share of Apple, that clearing firm until settlement date would pay 2% of the notional value of that trade to DTC that DTC will hold as collateral until settlement happens. Now, because GameStop, AMC, and KOSS are so volatile, DTC has raised that requirement collateral rate to 100%.
So what the WeBull CEO said on this interview was really interesting. So first of all, he received a call from his clearing firm, which is called Apex Clearing Firm, which also does all the clearing for a lot of these other apps such as SoFi, Stash, Tastyworks, M1 Finance, and Public. His clearing firm just basically said, listen, we can't support you guys doing any more GameStop, AMC, or I don't know what the other one was, KOSS, because the DTC has raised the collateral requirements that are typically 2% to 100%. So one of the clearing firm's jobs for those 2 business days where the stock trade is in limbo is to actually fund those trades. As you heard from the clip, 2% of every value of a trade is typically required by the DTC. So if Apple's trading for $100, you would require $2 for the DTC to have. But because of the volume and the massive volatility that it was trading at the time, basically the DTC said, listen, we're gonna raise our collateral requirement rates to 100% of that value of that share. Now imagine billions or millions of shares of GameStop trading hands, and each one is basically trading for $200 to $400. Well, you can imagine that amount of money required as collateral would pretty much get really large really fast. Now clearing firms aren't well funded or well capitalized, so basically what happened was clearing firms were like, oh no, we don't have this cash to front with you guys for the DTCC. And so the clearing firms had to tell their brokerages, such as Public, such as WeBull, such as Robinhood most notably, that hey, you gotta restrict these trades unless you can come up with the money. And that's probably why you saw Robinhood raise $1 billion overnight on Thursday and also $2.4 billion over the weekend so that they could fund these collateral requirements. Now on Sunday night, there was actually an interview with Elon Musk and the CEO of Robinhood for maybe about 15 minutes on an app called Clubhouse. In that interview, the CEO of Robinhood just basically told Elon, listen, we got a call that said, hey, we need about $3 billion from you guys in order if you want these trades to go through. Now, considering Robinhood is one of those brokerages that's raised about $2 billion lifetime because it's a startup, well, $3 billion extra dollars is quite a lot of money. It's basically a ton of money. So it's a little bit unclear as to why they raised their collateral rates from 2% to say 100% for WeBull, but we do know that back in 2008, they didn't raise it fast enough, and that was one of the reasons for the 2008 crash. So I do think it's a bit of a knee-jerk reaction, and they just definitely wanted to mitigate as much risk as possible because maybe there was a possible risk that maybe the market would have crashed. So one of the biggest controversial points last week was, okay, why are you allowing people to sell shares on Robinhood but actually not buy them? And the main reason here is that if you buy, the clearing firm actually has to front that money for you for 2 business days until the DTCC actually settles the trade. Now, if you sell, the DTC doesn't actually require you to have collateral to sell. So basically that's one of the reasons why Robinhood allowed selling. I think the other reason is that if you don't allow people to sell and get their money out, I think that's way worse than allowing people to buy only. So at least if you're going to limit one of them, then you should probably limit buying and not selling because not being able to sell is probably worse. Now, if you're wondering who's able to buy if no one's able to buy and you can only sell, like who's the buyer? Well, that comes down to the entire market. So the way you have to think about it is this, is that Robinhood is not insular. Basically, Robinhood trades to the rest of the market. So everybody else from all the other brokerages could buy those shares. So even though you're on one of these brokerages that might have been restricting buying, such as WeBull or Robinhood or Public or whatever it may be, if you sold a share on any one of those apps, somebody else from a different brokerage could have bought it. So actually one of the advantages of having what's called a boomer brokerage, such as like Fidelity or Schwab, is that they're very well funded, well capitalized, and you wouldn't ever run into these problems. The other thing at play is that Robinhood is the most used app by all of the people that were basically on Reddit Wall Street Bets. So there was a huge concentration of especially those retail investors trying to buy the meme stocks on Robinhood. So I'm pretty convinced by this point that if there was a brokerage that wasn't Robinhood, let's say Robinhood never existed and WeBull was the #1 destination for all these Reddit traders, then I actually think that based on this short squeeze that WeBull probably would have ran into the same situation. Now, that doesn't really excuse Robinhood because the communication was so bad that day. I believe the CEO on Thursday said, hey, we're trying to protect investors, and that didn't make any sense because how are you protecting investors from actually restricting them to buy? That's what I'm still pretty mad about, is that their PR was so bad and it hasn't been transparent at all, versus the WeBull CEO, what he did that exact same day was go on this podcast and actually explain the entire situation. Now, why was the WeBull CEO able to go on all these talk shows and be very transparent versus the Robinhood CEO just gave you some kind of canned response? So here's my speculation, guys. I don't know if it's true or not, but because Robinhood is being like looked at all the time by the SEC, they're basically under the microscope all the time, especially in the last 2 years for all the things that it's been in the press for. I think that they're just heavily regulated and probably can't say the things that they want to say. It's either that or their PR team just doesn't know what they're doing. In any case, this is kind of an interesting time that we live in right now, and we've never really seen this before. So what does that mean you should be doing with your money, especially if you're on Robinhood like me? So I'm gonna be doing a few things. First, I'm probably gonna transfer some of my stocks from Robinhood to one of these more boomer brokerages, only because they're a bit more well capitalized and safer to be with. Now, when I do transfer, I'm not going to liquidate my stocks, because if I actually liquidate my stocks for cash, I'm actually going to take a taxable event, and I don't want to do that. So if you guys are ever thinking about transferring brokerages, what you should do is always click transfer stocks instead of cashing them out and then transferring the cash, because if you transfer the cash, you're just going to be taxed on it. I'm still planning on keeping some of my cash on some of these apps such as WeBull, Public, and Robinhood, and basically I'm going to treat those portfolios kind of like my speculative or my play money portfolios. The app-based brokerages just simply take on way more risk because they're trying to offer you better features, so I can definitely understand that there's kind of a balance that you need to strike when holding your portfolio across different brokerages. I think clearly we're coming into an age where you're probably going to need a few different brokerages and have your cash spread out across each one of them, because you don't want to run into an issue like you did last week. So that's what I'm personally doing. I'm going to have my Vanguard Roth IRA. I'm going to have my Schwab or Fidelity. I'm still undecided, but I opened up a Schwab account last week. But my Schwab main portfolio, where I have a lot of my long-term investing stocks, and then I'll have some app-based portfolios just for play or for speculative investments. I hope this video was helpful. I wanted to get this video out there because there is quite a lot of misinformation on the internet right now. Hopefully you enjoyed this video. I basically wrote this up fully on patreon.com. It's a free public post, which I'll link in the description below. If you haven't already, make sure to press the like button and also subscribe to my channel for more personal finance and investing content. If you'd like 4 free stocks from WeBull whenever you deposit $100, make sure you use the link in my description below for that. And lastly, thanks to all my Patreon supporters. I appreciate you guys being here, and I will see you guys in the next video, which will be in 2 days. Peace.